And they started telling me about how they bought a lot of stock and spent thousands and blah, blah, blah. I'm thinking, oh my goodness, you know, somehow this is my fault. So I asked the question, which was, is there a happy ending to this story? Today I am going to see a event hire company and we'll be talking about marketing. Probably don't want to talk about marketing because they're really overrun with sales, so the idea of more marketing I think will make them feel a bit nauseous right now. However, we should always talk about more marketing. I walked in and said hello to the couple, and the first thing they said to me was, "You've caused a lot of issues," which is always a good start. And I was obviously like, okay, and adopted my say nothing, wait and listen approach. And they started telling me about how they bought a lot of stock and spent thousands and blah, blah, blah. I'm thinking, oh my goodness, you know, somehow this is my fault. So I asked the question, which was, is there a happy ending to this story? And they said, yes, there is. So I stayed. So they carried on and told me, and basically, long and the short of it is, they put their prices up 5%, no impact, you know, no one stopped buying. And that's because, as I said earlier, demand outstrips supply. So they put their prices up 5%, instant profit, 5-figure profit, for doing the same work. So that was good. And then what they're using some of that money for is to increase their stock, increase their capacity, and grow the company. So, self-financing. Let's work out how we got to there. I'll try and explain. Last session I had with them, I mentioned this earlier, was about profit and loss. And once again, this is my third attempt at this video, because to show someone what profit and loss accounts look like, but what they mean and how you use them and how you become a better business because of them is, I wouldn't say it's simple, but it's definitely straightforward. To tell someone on a video is proving to be problematic, but I'll try again. Why do I do profit and loss accounts? I do that to make brilliant decisions which have some science behind them, which means they're more likely to work. And the decisions that it helps me make are very significant because they're all about money. So how do I show someone how to use profit and loss rather than just read it? Well, we have to create it from scratch. I can't show you a profit and loss account and start telling you what things mean and expect you to instinctively realise what the relationships are between the numbers. I can't do that. And people do that. I mean, you know, there's no end of finance for the non-financial courses out there. That is your standard approach to teaching profit and loss accounting to business people. And I would argue that is really rubbish. Because what I want you to do at the end of the session is I want to leave and I want you to know how a profit and loss all fits together, so that if you pressure point one of the numbers, another one changes. Okay? And I'll explain exactly what I'm saying, hopefully. How do I create a profit and loss sheet from scratch, a real world profit and loss set of accounts without an accountant? And I'd argue that's exactly what you should do, because an accountant has a very, I was going to say peculiar, set, you know, standard mindset, which is he's trying to save you tax. That is what he's trying to do. And that is his or her job, is to reduce your tax burden. That is not improving business performance. Okay? I need reality to increase business performance. And reality isn't necessarily what an accountant puts on a profit and loss snapshot in time. Yes, they are real figures and they're not made up. But do we learn anything? that we can actually use to make great decisions? I'd argue not a lot. So, the only way you learn anything is to do it. And so last session, sat down with this business, the owners of the business said, right, let's do a profit and loss based on instinct, gut feel, some science and some experience. That means if you give me your old set of accounts, I'd put them on the floor under my chair because we're not going to look at them. And if I ask you a question about pricing or cost and you go and try and log onto a spreadsheet, I stop you because I don't want you to use reference numbers. I want you to tell me gut feel, in your heart and your gut, what do you think is going to happen in your business? Okay? Bear with me. I know reality is important. So, the first question, how do I do a profit and loss like that from scratch? The first question I ask is, how much do you think you can sell this year? Not in money. How much product do you think you can shift this year? And people will say, however many units or however many services. And I will say, are you sure? Why? Why? You know, video's not stuck. Why? It's the best 3 words you should ask yourself all the time. And so if they say we're going to sell 100,000 hire units, I will say, based on what? Tell me why would you think that? And we start challenging the assumptions. And they will be based on what we did last month. They'll be based on what we did last year for the same period. And they'll be based on something that isn't tangible. And this is where it moves away from accountancy. They'll be based on gut feel, on what I know about the market, what I see happening in the market in terms of news and so on. And most importantly, what my customers say to me, good and bad, right? So we establish how many units you can sell. At that point, I go, how much are you going to sell them for? This is not complicated. How much are you going to sell them for per unit on average? And in this particular case, they said £500 each last session. And I go into my annoying mode and say, why? You know, why do you say that? And they will tell me, probably, if I'm being honest, that's what our competitors charge. Or that is what we've always charged, which, to be honest with you, are 2 very poor reasons to set a pricing policy. The only foundation of a pricing policy should be, how much are we worth to customers? I don't care what anyone else is charging, because if we're worth more, that doesn't necessarily mean the product, that could mean services or customer service or answering the phone or what we know, then people will pay more. And so most companies we run into will be not priced optimally. Okay? So they're the first 2 questions. How many units can we sell? Why? How? Why do you say that? What's the price we're going to charge for these units? Why? How? Why do you say that? Okay? It's always about experience and gut feel. That just gave me the top figure on the profit and loss sheet. Sales. How many units we sell multiplied by how much we charge on average per unit. Got the top figure. After that, I say, okay, what is the cost of doing here? And the cost of doing is related to sales. That means if I sell 1 rental hire, that's going to cost me money I would not have incurred if we hadn't done the sale. What I mean is, if I have to travel to London with a load of chairs, that's going to cost me petrol, it's going to cost me transport, it's going to cost me labour time that we wouldn't be using normally, right? Labour time. And these are additional costs that we would not have incurred without our success of doing the sale. And so we say, okay, what are the costs per unit? Tell me how much it costs, do you think, to deliver, make, fulfill, and, you know, that extra cost of doing the service and selling the unit. And we get that information, that's the cost of sales. I just times it by the number of units you told me initially, and I know the cost of sales. We just worked out gross profit. How much money are we going to generate? How much is it going to cost us to make it, or service it, or deliver it? Gross profit is left over. Finally, so what are the costs of existence? Costs of existence are overheads. Okay, that means if we sold nothing at all, as a business, we still spent money just to exist and be here in business. Offices, payroll, people on payroll like long-term employees, professional fees accountants. Say, what are the existence costs? You know, just to be here. Forget selling anything. How much goes out the door at the end of the year? And they will give me a number. Now, with those cost ones, I then say, all right, let's get it cheaper. Really? Oh, this is how we challenge. This is what we use profit and loss for, is to identify opportunities to save money and make money. So, you know, let's go and ring some people up. Let's ring some suppliers. Let's ring them up and say, you know, I already get it for this price. You know, what are you going to give it to me for? And 8 times out of 10, they'll give you a better deal because everybody wants the customer. Fine. Then I go to the pricing side and I say, how much, you know, you told me how much you're going to charge. Is that enough? Are you sure? You know, your customers are telling you you're great. You've got a waiting list. Demand exceeds supply equals put your price up. Now, if I put my price up, that's straight on the bottom line, net profit increase. If I cut costs, straight on the bottom line, net profit increase for doing the same work. Okay. These are massive, massive decisions to change a business. And you can only do that with science as a process that is profit and loss, gut feel, instinct, real world analysis. Now, at the risk of belittling financial analysis, when I first became a business advisor, I met someone who used to be PA of Barclays' chief executive. I said, I don't understand financial analysis really, this is going back a bit. I don't really get it, you know, I'm not sure where to start. And his advice was brilliant. And this is like the head of Barclays' PA, you know, super PA. He said, Elliot, look down the sheet, pick the 4 biggest numbers, do something about it. There you go. Finance for the non-financial. And he's so right. That's it.